This is Matthew Cratter from Trader University, and today I have a very important story to cover. This is really the beginning of the end of the petrodollar system, which has been one of the foundations of the modern financial system since the early 1970s. And don't worry if you don't know what a petrodollar is. I'm going to cover that in this video. But it's very important to understand what's going on with the end of the US dollar system and what it's going to mean for the global financial system as well as for your personal finances. So this all goes back to President Richard Nixon, who's the one that took the US off the gold standard, basically said that you could no longer redeem those little green pieces of paper for shiny yellow rocks. This is obviously a huge crisis for the dollar, which was the world reserve currency at that point. So they needed to come up with a new system. They basically said, we need someone to want our little green pieces of paper now that they're no longer convertible to shiny yellow rocks. And so let's make a rule that you need to have these green pieces of paper to buy crude oil. So in effect, we went from a gold-backed currency to a loosely crude oil-backed currency. And because the U.S. was one of the largest consumers of oil, we still had a large manufacturing presence in the early 70s. And because the Saudis were the major producer of oil at that point, it was easy for the two countries to come together and make this agreement. And the basic agreement would be that the U.S. would provide security and defense for the Saudis, and then the Saudis would agree to sell their oil only in exchange for U.S. dollars. They couldn't sell them for any other currency. And so what this meant is that countries needed to get their hands on U.S. dollars in order to buy crude oil. They needed to work hard to exchange goods and services for U.S. dollars in order to buy oil, which every country obviously needs. And this also gave the U.S. a huge advantage, especially in the Cold War, because the U.S. got to print money and buy oil, whereas Russia, for example, the USSR, the Soviet Union, had to actually export and get its hands on U.S. dollars in order to buy oil. So being able to print up little green pieces of paper for crude oil really was what de Gaulle called an exorbitant privilege. He was referring to it in the context of gold, but it really is true in the context of the energy complex as well. And so what this meant is because crude oil and energy is the root commodity, it's the most important commodity as an input to so many other things, that all globally traded commodities ended up getting priced in U.S. dollars, which forced countries to stockpile U.S. dollars if they wanted basic commodities like wheat and oil and copper, etc. And what this meant is that the U.S. dollar and U.S. Treasuries, which are U.S. government bonds of various maturities, became the new gold, the new global reserve asset. Now they weren't nearly as good as gold because they had virtually an unlimited supply, but they did become the reserve asset that central banks and countries held on their balance sheet to store their savings. If you're finding this video helpful so far, be sure to hit that subscribe and like button. Maybe share this video with a few friends as well. You can read more about this deal between the Saudis and the U.S. in this Bloomberg article, which I will link to below. Now, what we've been seeing over the last couple weeks and couple months is really the end of this system. I covered this story when it happened. Russia and China agreed a 30-year gas deal. This is natural gas via a new pipeline. And instead of settling this in U.S. dollars, as it traditionally would have been, it's going to settle in euros. We'll still see whether Russia wants euros after having all their euro FX reserves frozen. But needless to say, this is a bilateral agreement that manages to bypass the U.S. dollar. And we saw this also happen where the Saudis stuck with the Russians. This is called OPEC Plus, where the Saudis and the other Middle Eastern oil producers basically had an agreement with Russia as another large energy producer. And so we saw the Saudis snub the U.S. just a couple weeks ago. And now we really have the bombshell, which came out yesterday, that Saudi Arabia is considering accepting yuan, the Chinese currency, instead of dollars for Chinese oil sales. It turns out that if we scroll down here, China buys more than 25% of the oil that Saudi Arabia exports. And so if you price these in yuan, this is actually a really big deal, and it goes against the petrodollar system, the rule and the promise that the Saudis made to the U.S. that they would only sell their oil for U.S. dollars. Now, in the past, and I should say that this is ongoing, and China's head, President Xi, is going to visit Saudi Arabia, it looks like in May, as they work out these deals. It's very important when you have a network, when you have a currency network or any other kind of network, you want as many participants or as many nodes in that network as possible. And so US dollar network effects are extremely important, and it's very important to make sure that everyone was selling their commodities for US dollars. And in exchange, one of the things the US did was keep all the trade routes open with its navy and its air power, etc. And so when you have various nodes in the network, like the Saudi node or the China node dropping out, and I'm using sort of crypto or Bitcoin terminology to make this analogy, but when you lose nodes in the network, it weakens the whole network. Historically, the U.S. has understood this, and it's bombed countries that tried to sell oil for something other than U.S. dollars. This is what happened to Saddam Hussein, who decided to sell oil for euros, and he ended up having his country attacked. And then Gaddafi as well in Libya had the same problem. It's a much bigger deal, though, when it's the Saudis and the Chinese and the Russians. It's not quite as easy for the U.S., especially with its weakening military power and its defeat in Afghanistan, to try to do something like this, especially when you have countries like Russia and China, which obviously have nuclear weapons. What this does, though, and the way it weakens the U.S. dollar network, the petrodollar network, is if you can buy crude oil using yuan or euros, then why do you need to hold any U.S. dollar? So if you're a small country or medium-sized country, instead of stockpiling, say, $500 billion worth of U.S. Treasuries, maybe only stockpile $100 billion or $250 billion, because you don't need as many, you don't need to have those reserves in order to buy energy and other commodities. Less demand for U.S. dollars means less demand for U.S. government bonds, which are called Treasuries. And why is this a problem? Well, it's a problem because the U.S.'s main export for the past 40 years, as we've lost our manufacturing base, has not been goods and services, but our main export has been pieces of paper. It's been Treasuries. And this is what we mean by the U.S. having a trade deficit. We send you little green pieces of paper or digital pieces of paper, and you send us crude oil and nice things made in Chinese factories. So it's been a pretty good deal for the U.S., at least for the U.S. elites. It's hollowed out the manufacturing base, and it's hurt the working and middle classes quite a bit. But for Washington, D.C. insiders, for bankers, and for corporations, this has been a windfall. And this is the trade deficit. So if people don't want as many of these pieces of paper, these green pieces of paper or digital pieces of paper, that means the U.S. cannot issue as many treasuries. It can't borrow as much money. And this is a problem not just for all the worthless U.S. government programs, like, for example, the $2 million spent on jazz playing robots, the Census Bureau's Super Bowl ad for $2.5 million, the used cars that cost $13.5 million, and my favorite, the study looking into the effectiveness of golf equipment in space, an actual research program done by NASA and paid for by the U.S. government. I was going to say paid for by your tax dollars, but because tax dollars don't cover this anymore, the tax revenues are too small, it's really paid for by U.S. borrowing. And so this is why the U.S. needs to keep exporting little green pieces of paper, and why it needs the petrodollar standard. It has to pay its Medicare to retirees, Social Security. We can't cut our defense budget, and we have to pay interest on the debt, all of which add up to almost the entire U.S. tax receipts. And so this is a problem. If the petrodollar system frays, what it means is it makes it much more difficult for the U.S. government to finance its deficit spending, and the buyer of last resort has to be the Fed. This is why the Fed's going to need to continue to grow their balance sheet, and it's really going to be impossible to shrink it or stop the money printing because we don't have these foreign buyers. We have less demand now, as the petrodollar standard phrase. We have less demand for U.S. dollars and also U.S. Treasuries, which is the main way you store U.S. dollars. Now, this is a strange thing for the Saudis and for China, simply because the yuan is a non-convertible currency. You cannot exchange it. It doesn't trade freely with other currencies, other fiat currencies, like most currencies do. And so then the Saudis, if they're selling their crude oil for yuan, they're going to end up with all this Chinese currency, and the question is, what are they going to do with it? A couple ideas off the top of my head. They can obviously import manufactured goods from China. China is still really the manufacturing base of the world. They can also pay Chinese companies internally that help with Saudi infrastructure, especially crude oil infrastructure. Here's a list of from the Saudi Chinese business website. KSA just stands for Kingdom of Saudi Arabia. We have Sinopec, etc., Sinoma, all these companies. So that'd be another place to spend the yuan. The Saudis could also buy Chinese assets like companies, possibly publicly traded stocks as well, real estate, etc., inside of China, especially as this alliance becomes stronger. And this is really quite a shift because the Saudis have been a very strong U.S. ally for many years, or at least a very strong U.S. ally on paper. I'm not going to go into some of the controversies which you're probably aware of. But at some point, the non-convertibility of the yuan will probably cap Chinese-Saudi trade. At this point, it might make sense to switch to gold. China's not a fan of Bitcoin. They could switch to Bitcoin as well. But the bigger picture here is this is really the beginning of the end of US dollar hegemony. This is a huge, huge story that should have been covered much more. There's so much virtue signaling in the news and on Twitter, and what it means is that a lot of these very important stories get passed over, especially if they're a little bit complicated to explain. But this is really very, very important for the fate of the US dollar. And what we're seeing is that the petrodollar system, which has been in effect, as we've seen, since the early 1970s, is coming to an end. This is going to lead to many second and third order effects that remain to be seen. We can see shifting geopolitical alliances. We can see less demand for treasuries and more Fed money printing as a result to buy those treasuries, since there are going to be fewer foreign buyers now. It also means that bearer assets like physical gold and Bitcoin are looking a lot more attractive to sovereigns. And unlike stocks and bonds and cash deposits, bearer assets do not have counterparty risk and cannot be frozen. There was this traditional recycling of petrodollars. The basic agreement was we would buy crude oil from the Saudis in exchange for US dollars. Then the Saudis would take those US dollars and buy US treasuries. And as that comes to an end as well, that means that the central bank, the Federal Reserve, is going to need to buy more treasuries. So we'll be looking out for these second and third order effects. But what it means is that we are very susceptible at this point to black swans and to bad things happening as this system begins to collapse. And the Saudis actually agreeing, if this is true and if this begins to happen, pricing their oil in yuan is highly, highly significant, and it is going to lead to a fracturing of the current financial system. And we'll be tracking that as it happens. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.